What's going on, guys? Welcome back to the Journey to $1 Million series. My name is Adam Reiser, and this is the 23rd video of this series where I document my experience and my journey from starting off with $1,300 in starting capital within the foreign exchange markets to eventually documenting my way all the way up to a $1 million assets under management fund. And this is going to be the 15th video of the series, I believe, of my $500,000 challenge account. This is the account that I purchased through Search Trader, and I'm leveraging to get used to higher lot sizes and getting better with risk management and so forth. And we're sharing all the ups and the downs here. 15 videos holding with this $500,000 challenge account. Arguably been a little too passive with this account, but also just learning a lot along the way. And we've had this account for about 6 months now, which is absolutely crazy. And we had an interesting week. Made a lot of mistakes, but also made a lot of adjustments and improvements. And I'm very excited about how this week turned out, and what it's laid and the foundation that it laid for the coming weeks ahead. So we're going to go right into, of course, the trades and my thought process, and we're going to go right into it, right? So let me share you my screen, and we'll get started. So as you can see here, let me go to the results of the week. My results of the week are pretty bad. I lost about $1,300 in profit overall, but the commissions really stacked up. So I had a negative $5,220 week. Not the best week. If you go look at my dashboard here, you'll see that these are the days that I posted. I placed some trades on Sunday, placed some trades on Monday, Wednesday, and Thursday. Tuesday, I did not trade because I had responsibilities that stacked up. And then Friday, I did not trade because I didn't journal my entries from Thursday. And also the markets didn't really show me great opportunities. So I only traded 1, 2, 3, 4 days out of the week. Learned a lot from this week, and we're going to go right into detail about the different trades. And before I do that, I also want to share with you my Search Trader account. As you can see, we do have the maximum drawdown is 473,000. We're currently sitting at an account balance of 489,000. So we have about 16,000 to go until this account is blown. Or if you look at it, I have 16,000 wiggle room to play with to grow this account to get it profitable, right? And so that's what I'm thinking. And I'm very excited about the lessons that I've learned this week and how that's going to apply for the rest of this challenge, this series that I'm documenting on YouTube for you guys. So we'll go into detail about the different markets that I was trading and what I was seeing. So I did place some trades on Bitcoin. I had anticipation that there would be some sort of rejection at this area. As you can see, there was previous support, thinking that there was going to be rejection, potentially come back down to 30,000, and that was my first loss on the account. I did trade Bitcoin quite a few times on Sunday. It was supposed to be a long-term weekly swing trade that I ended up just over trading a little bit on Sunday. Started off the week with a little bit of a loss, but we'll go into detail with those trades. But you can see Bitcoin just launched upwards. It's not an asset that I primarily trade. I just like to really monitor this price because I plan on investing a lot of money into Bitcoin. Gold had an interesting week. I did forecast that gold was going to have a potential retracement downwards to this potential support area or this support area, and it did just that. However, I did not capture many of the sells here because I didn't know if it would reject here and then continue upwards, or if it reject here and continue upwards. So we are in a little bit this limbo period. We're going to have to see how this week closes and this month closes to see how this gold ends up looking going into the end of the year. I still believe that we might have a nice retracement wick this week, and then a nice bullish close that'll signal potential movement to the upside. So I'm going to be looking at both shorts and buys for this week, depending on whatever the market presents to me. Who knows, right? A week is a long time in the markets, and we're going to be basing it off of the daily timeframes as well. Now going on to EU. EU had an interesting week. It had this really nice bullish week, and then it just had this little bit of a rejection, up and down price action, lots of choppiness, lots of movements. I was on the wrong side of a lot, but I was also on the right side of a few trades. So we're going to go into the details about that. GJ had a very bullish week last week as well. A little bit of back and forth price action this past week as well. GU is another pair that I picked up this week, and as you can see, last week had a really strong bullish move, and then this week had a massive rejection. And US 30. US 30 had a very strong bullish week last week and had a rejection, but a continuation to the bullish side. And overall in the DXY, this is the dollar strength index. This is what I usually base my analysis off of for US dollar pairs, because they very much move in I guess you could say alignment with each other. And as you can see, last week we had a strong rejection off of on the DXY, and this week we had a retracement back to the upside. I don't know if DXY will reject from here and continue to move down, which is what I'm anticipating, which would mean buys on the other pairs that I was telling you about that are valued in US dollars, or if this rejection will signal a move to the upside, right? There's a lot of strength and movement behind the US dollar right now. There was a lot of Federal Reserve Jerome Powell speaking last week, and a lot of eyes are on this December rate hike, and a lot of things that are going into that decision. So we're going to be watching this closely. But to get into the nit and gritty and the potatoes, the meat and potatoes of my trading this week. So we'll go to Bitcoin. And as you can see, these are the trades I placed on Sunday. So as you can see, we had this. We'll go to Bitcoin here on the daily time frame on Sunday. I was looking at these candlestick closures, thinking that it would potentially go down. Bitcoin actually ended up going down. My first position, as you could see, I did place a position that went down about $800, and came back up to my stop loss. It basically hit my stop loss and then basically rejected. So that was an interesting trade, a round trip to a loss. That was a swing trade that I was a little too antsy to place on a Sunday night. That's a common theme that you'll hear from me this week, is that I get very excited to trade on the week because I want to, just improve and just get experience. And I was probably a little too antsy. And as you can see on this trade as well, I opened up another position, thinking that I could potentially re-enter onto this short because I still believe that there was a short opportunity. And it did go down, but came back up. And I opened up another position here as well. And I overall just said, you know what? Sundays, I'm losing too much money on this Sunday. I'm just not going to trade. And so I took this Sunday with a loss of, I believe it was $1,500. Let me see, go to the dashboard, $1,400 on those 4 Bitcoin trades here. And we learned, just wait until Monday, wait until your trading time frames that you make a lot of money on. So a lesson learned from these trades is just wait until you're in your zones, your kill zones, which is my New York session. Just wait until those New York sessions to enter into those positions. And I'll probably see a lot more success, which is what I started learning towards the end of the week. And then, of course, my first trade on Monday, I was playing around with US 30 index a little bit because I see a lot of influencers trading US 30. So I wanted to test that out. And it was taking my focus away from other markets a little bit. And I believe this was 8 o'clock in the morning. Yeah, 8 o'clock in the morning. I woke up, showed up at every single New York session open, and got very excited to play some trades on US 30 because I wanted to test out the lot sizes. I opened up a 1 lot and a 10 lot, closes out pretty quickly, but I didn't stick through them. Just saying, you know what, just stick with the pairs that you know how to trade with. But those were the first 6 trades of the account this week. I was trading pairs I'm not really used to trading. And I was just trying to test the waters a little bit to see how the market would react, and of course also to make some money in other markets. And just didn't work out for me. Started off the week with about $1,500 in losses here if you total up these 6 trades. And so as we transition into my first Euro trade of the week on Monday, you can see here. Let's go to the 6th of November. So on the 6th of November, as you could see, let's go to Euro as well on the other chart. So on the 6th of November, we had a strong bullish move up on Friday, and I was basically looking at this area as a potential move continuation to the upside. It was holding this area a little bit, and so I entered in at these trades were entered in at 8:45. So at 8:45, as you can see here, we had a nice solid, I guess you could say a sell candle close at 8:30. and I caught this buy a little bit going up, and but the where I entered in, it was still going down. So, in a 30-minute candle, it can go up and down. So it ended up closing bullish, ended up going up a little bit, but overall, gold euro was not a buy for these first few days of the week. It would end up being a short. As you could see, it just kind of rejected pretty hard to the downside, created a nice, little double bottom here and on Wednesday, but on Monday it was a downward movement. And so I opened up my first trade of the on euro, and that ended up being a loss. You could see here I lost about $12,000. This was probably an early entry. As you see on the lower time frames, I was basing it off of higher time frame analysis. Lower time frames don't have to align with higher time frames, but usually more often than not, higher time frame analysis do work out pretty favorably. So I've been trying to do a better job at sticking to the higher time frame analysis. It just wasn't the right direction overall, and so I lost money on this buy. And as you can see, I also scaled in a few more trades. This is probably this over trading a little bit, being down $1,500 to start off on a Monday. That's the second week in a row that I started off on a Monday with a loss because, the previous week I had that position that I opened up over the weekend, and that ended up gapping down, lost on that position. And then on Monday, just very eager to trade, got impatient, and just, over traded a little bit here. As you can see, placed quite a few positions. This one stopped me out. This one stopped me out. And this one stopped me out at this structural area. This is something that I could do a better job at. As you can see, didn't actually break through structure, so my stop should have been a little lower, which is where this was structure. This support area is being held, and it did go up a little bit, so I could have made some money on these trades as in like a little scalp opportunity. But just overall wasn't really in the best thought process and the mindset to take advantage of these buys. And I did retry as I saw that these positions were held. I did retry the buys here. So I did open up another, what is this, a 50 lot and a 35 lot. So as you can see, I started using pretty big lots to kind of make back up on my trades. And you'll see why I didn't trade on Tuesdays, because I overtraded a little bit on Monday morning and I lost quite a bit of money. And that's the reason why I didn't place trades on Tuesdays, because I wanted to basically say, hey, look, if you break your rules, you overtrade, just don't trade the next day, sit on the sidelines, learn from your mistakes, and grasp the reality of what you did. So I lost Monday 3.9K with all this over trading here in this little congestion area. Overall, probably would have been better off just waiting until about 9:40 here, seeing that this area was rejecting and catching the sell-off. Would have been a much better trade, because as you can see, much cleaner price action movement going to the downside than if I had just, instead of waiting for the buy opportunity and trying to counter trend trade a little bit here. As you can see, this was a very clear indication that resistance was being formed, and that this was probably going to be a short for this particular session. Doesn't mean that it has to go down, but the charts were telling me this is a little bit of a rejection area, and that this is probably going to be a short to the downside. So as you can see, I did flip my bias a little bit, saying, okay, you know what? My buys didn't work out. Let's just switch to the sell side. This is a little bit of an over trade right here, and I closed out of the position a little too soon. This position was a very tight stop, but this position would have made me about $6,500 if I had just held it a little bit longer. And to kind of summarize overall, Monday was just a very big over trading day, and I just had to do a better job at controlling my eagerness to trade on the week, staying patient, and just not trying to start off with the week with a loss, right? And so I could do a better job at learning, and that's why I'm sharing this experience with you guys, is because there's always room to improve and always room to grow. And so if we go to the next trades from Monday to Wednesday, right? Because Tuesday I did not trade because I overtraded on Monday. I said, look, you overtraded on Monday, just hold off for a day. On Monday, I had on Wednesday, as you could see, I was looking at this potential double bottom area here, one bottom, double bottom right here. Had a really nice 30-minute, another shorter double bottom, or if this is actually considered to be a W, as you can see, created the support down here, another support with a rejection and a close above, engulfing close, signaling upward direction. And I was just a little too impatient. As you can see here, I woke up early every single day this week. I was in front of the markets by 7:30 every single morning. And I just was very antsy to trade and make back up some money that I lost from Monday. And just got too eager, opened up too large of positions before the markets really even showed me clear direction. And just end up losing. What is this? I lost one, two. Oh, I placed two trades on that Monday or that Wednesday. And so um another big loss to start off on Wednesday. And as you could see, the charts did end up going up pretty working out pretty well for me, right? The idea was validated. I was just a little too early on the entry. And trading is all about timing, really, more than anything, especially if you're going to be using large lot sizes on lower time frames based off of higher time frame analysis. I was just a little too soon, a little too early on my entry, and created that support. And I just didn't want to overtrade, and didn't know if this was going to keep going up or down. And I did a little bit of a revenge trade here. Opened up an 80 lot with a very tight stop. I think I was risking maybe $1,600 on this trade. And I did actually make some money on this position, which kind of broke the losing streak of Wednesday, Monday and Wednesday. I was just patient, waited for potential area of retracement. And, there was this bullish move upwards. Where's the next area that it could potentially be a short? And, I saw this rejection area based off of this previous support. I said, you know what? I could potentially risk some money here, see if I can, get some money back, which is not a good mentality to have. But this trade did end up working out. And, basically the lesson of this trade right here, Tommy, is that if I'm more patient, I can make money, right? And so that's what I carried into Thursday. If you look, I actually did end up. Oh, I forgot to mention on Wednesday. Not only did I focus look at EU, but I also looked at gold. So if I go to gold as well, gold was showing me rejection just like euro did to the downside. Let me go to here. Gold, the 8th. I don't know why this is. I think it maybe. Sorry, guys. You see here. So gold and euro usually move pretty similar, right? Euro was showing me rejection, as you could see here, to the downside, which was potentially signaling a move upwards, which it did. And this was a very nice bullish move upward. And I thought gold would be doing something similar. Since I had missed the move to the upside on euro, I said, why not potentially take the same idea on gold? And so that is basically this area right here. As you can see, had not as clear of a double bottom. Really, this should not have been entered in whatsoever. This was definitely over trade, revenge trading, emotional decision making. Gold is overall in the downside momentum, and this really didn't show much opportunity for upside potential. I was just in a very emotional state of mind, and having lost so much on this week. And I said, you know what, it's just not worth honestly, my thought process was if euro is going up, maybe gold can go up too. Maybe I can make back some of the money, and that's just not a very good mindset to have. And that I placed these gold position buys before I had opened up this short on the sell side with euro. But basically, all these trades did is compound my loss even more and caused me to be negative $2,000 before I opened up this short to the euro side. To the downside on euro. That would have made me a lot of money if I had held out a little bit further. Or actually, no, this euro trade. Sorry for jumbling these trades, guys. There's a lot, and this is what happens when I overtrade a little bit on the week. And you're going to see the improvement towards the end of the week. As you can see, I placed very few trades on Thursday, but they ended up working out pretty well. So, on gold, I just had a stupid buy, stupid decision making. This was not a clear buy opportunity. If anything, I should have probably waited until this candle had closed, this 30-minute candle had closed. And as you can see, let me see if I can go to the 6th here. So as you can see, gold was showing me potential retracement, rejection, and I should have waited until at least this area around what is that, 850. And as you can see, there's a common theme, right? the trades that I was placing a little too early, I was losing money on, and the trades that I was waiting a little later on, I was making money on. So I need to do a better job at waiting until candlestick closures, specifically that 4-hour candle that closes at 9 a.m. Eastern time. I need to do a better job at waiting until that candle closes to show me its true direction. And just lost money again, and scaled in a little too early than I should have, and just ended up losing quite a bit of money. And so those trades, although I did close out of them pretty quickly, I could do a better job as a trader. I know this is not representative of my capabilities, but another thing that I need to factor into as well, and I'll go over this in detail when I share with you my journal entries for the day that I wrote down, is that I was letting external influences affect my bias on the day. And so there were both, I think it was both Monday and Wednesday, I had a good idea of where the charts were headed into, but I had traders that I look up to that were saying the opposite of what my bias was. And as somebody who's developing my confidence as a trader, and still figuring out my strategy and my processes, and really just developing my confidence, that's a very important thing. I was letting their success overweigh my analysis, right? Because they're making money, they're successful as traders, so possibly they have a better idea of where the market's heading into. And so I closed out of my positions, which ultimately resulted me in having losses, even though I was on the right side of those trades. So as you can see, if I had these buys and those buys ended up working out pretty well, I would have made quite a bit of money on euro. Gold was just a wrong buy, but also, that's just something that I'm going to be learning and developing and implementing moving forward. I created a strategy for myself where I turn off my phone between the hours of 8 a.m. to 11 a.m. just to make sure I can very much focus and compartmentalize my trading and not have any external influences affect me. And that's something that I'm going to be doing moving forward. And I did that on Thursday. As you can see, on Thursday, I ended up recording some wins. And so we'll go over to Thursday as well. So on Thursday, if we go over to Thursday, this is the hourly time frame. But if we go down to the lower time frame and I go to Thursday on GU on TradingView, you can see that on Thursday we had this really interesting almost like inverse head and shoulders here. So you can see the left shoulder, the head, and the right shoulder on the inverted time frames. On the daily time frame, we had, this was on Thursday as well, we had this strong wick to this bearish candle, but a strong wick going down showing rejection. We had another bearish candle showing strong wick rejection to the downside. So I was anticipating a move to the upside. And so that's what my thought process was going into Thursday, especially on GU. If I go to the lower time frames, you can see that on GU, I also was looking at this potential double bottom inverted head and shoulders. And so that was the basis for my analysis for my entry onto these trades. And I actually had really good entries on GU. My first position that I entered into was a loss. It went, I caught a very nice, on a, this is, you can see here, this is a little 5-minute double bottom move to the upside. And I caught the retracement, had a really good entry on this position, and it floated up. I believe it was about $3,000 at this point right here. And I did not close out, and it came back down, rejected this resistance, and created almost like a 5-minute double top to the downside. But this didn't break the structure that it was forming onto the lower time frames to move upwards. As you could see also on on GU, it was showing rejection to the downside. We had this very long wick going down on 8 a.m. And but I wasn't trading at 8 a.m. I was trading at 9, 10 o'clock in the morning. I waited until after the 4-hour candle had closed. So you can see here, this is 9:30, 9:28, 9:28. Was right here. So 9:30. So I missed this double bottom down here, which is this general area. This would have been a really potentially good area to buy with a very high risk, a little bit higher risk, but low risk in terms of where my stop loss would be, but also high potential return from if I were to target this area from here, which is a move of at a minimum of 14 pips, potentially up to 20 pips or even higher, which is what it went up to, 33 pips. So I learned a lot from studying my dashboard here. If I go to my insights, not my insights, let me see, my reports. So if you go look at my reports on the traded time, I make the most money after during 10 a.m. So right, so 9 o'clock to 10 a.m. I make the most money, and that's after the 4 hour closes. But look how interesting this is. I lose the most money trading before the 9 a.m. candle closes, the 9 a.m. 4 hour candle closes. So what did that tell me? It told me that on Thursday, what I will do is I will try to wait until the 9 a.m. candle closes. And so if I go down to my trades, you'll see that this is 9:30, 9:45, 9:55, and this is also 10:30, right? And 10:30 is when the last trade was entered, or actually had closed out based off of the rejection that we saw on as you can see here, it did close out at 10:30. Actually, this is a little later than 10:30. I think, yeah, this is a little later than 10:30. Yeah, 10:30 would be right here. I'm not sure what time. This is about 1:30. This is right before Federal Reserve Chairman Jerome Powell was speaking at this conference, which I listened to the entire 2 hour long conference about, talking about the strategies that the Federal Reserve is going to be implementing for the US dollar for the remainder of the year, and how they're watching the data pretty closely to determine whether they're going to raise the interest rates again in December or not. But to kind of circle back and zoom in really more on these trades, I've opened up this buy, came back up and round tripped me back out, didn't break through structure. So I said, okay, didn't break through structure. I got a little faked out here. I kind of did a little FOMO on this position right here. I didn't wait until this candle. I did, as soon as this candle broke above this 5 minute rejection, I said, okay, this is going to keep going up. And of course, the markets have their own way of moving, right? Even though you could be right on the idea overall, you could be a little impulsive and enter soon. So I open up this 40 lot as another trade based off of the same idea that a euro GU is going to keep going up, the pound dollar is going to keep going up, and so this trade actually ended up floating drawdown about negative $2,000, but my stop loss is below here. So I said, okay, this is, potentially going to keep coming down, but as long as it doesn't break through structure, I can potentially keep scaling it. And so this is the one mistake I did make on this trade, is I scaled it a little too fast prior to the market really showing that it was going to keep going upwards. And so I did open up this 40 lot, this 25 lot, and I opened up a 10 lot down here. The 10 lot was based off of the swing trade idea that it would hold this area, which is where it was trading at. So if you look at this area is 676. So I was holding this 676 area, thinking that this was going to bounce off of this previous structure and keep going back upwards. So my take profit was actually up here on this 10 lot. That would have been a $12,000 trade if this idea had played out. Obviously, we saw some rejection to the downside, to the upside, and a massive bearish candle close to the downside, which means that this idea was invalidated. But it wasn't invalidated for this New York session that I was trading. And so actually the New York session showed me some pretty bullish momentum going upwards. The 40 lot that I placed a little too soon did make some good money. I think I closed out, yeah, $1,300, secured some profits to make back up for the fact that I was down on the day. The 25 lot, I took profits in a pretty decent position. I could have wrote it out a little bit more until it showed me that it was actually rejecting on this area, which would have been an extra. Let me see here. Let me see if this will work. Yeah, it does not show me that. Well, if I had held out this position, I think this would have been another 10 pips, I think, which is an extra $2,500 on this 25 lot. You know what? You can't go broke taking profits. That's the reason why I opened up these partial positions. And what I did was I closed out of this 40 lot definitely too soon. This 25 lot was a decent closeout area. I probably could have waited until I saw this rejection, to the upside, down, up, and then closed out probably around here, possibly at the same level. But the 10 lot, I was anticipating it to keep going upwards. And so I was married to this idea that I was going to keep going up. And as you can see, it just started slowly chopping down for the rest of the afternoon after the New York session was over, in anticipation of Jerome Powell to speak. And then the big move happened. You can see volume kind of started drying up, smaller candles, tried to form a support again down here. It was rejecting, but then it just broke through. came back up, rejected this area, and just massive sell off. And this is at 2 o'clock, which is when Jerome Powell was speaking. He was basically talking about interest rates increasing in December, that they're not done raising rates just yet, but they do want to be not super aggressive raising interest rates because they don't know for certain. But as soon as you raise interest rates, guess what? It's really good for the dollar, especially if you're raising interest rates for the dollar. So any pair that's trading against the dollar will go down. And so pound yen or pound dollar went down as soon as he started talking about increasing interest rates. And this would have been a really good short opportunity here, also as well as here as well. So overall, on Thursday, I did record a profit. Let me see if I go back to my dashboard. On Thursday, I did record a profit of $4,000. If I had closed out of my 10 lot position up here, or potentially even around here, I would have made an extra, if I closed it up here, would have made an extra $2,000. If I closed around here, would have made an extra $1,000. This trade was floating, anywhere between $2,000 to upwards of, or as little as $1,000 for about a couple hours before eventually taking me out at break even. But the lesson of this day today as a whole on Thursday is that I waited until after the 9 a.m. candle close. And as a result, I saw some significant profits for the day and kind of recouped back up some of the losses that I had made on the week. And so now imagine, all right, let me stop my share. Now imagine if I traded smart like I did on Thursday, on Monday, Tuesday, Wednesday, and Thursday, and Friday, right? What would that lead to in terms of success on my account? And that's what I talked about here in my journal entry. So if you guys want to pause, you can review this real quick, but I'm going to go through it as well. So my total P&L for the week was negative $5,210. My total trades, I placed 21 trades this week. Not good, but they were all based off of a few trading ideas. Arguably, the gold buy was a very bad opportunity. But I executed on a few trade ideas, but I had a lot of trades within those trade ideas I have to do a better job at managing. I placed I had 7 total wins, which totaled to be about $7,204 after commissions, about $1,029 on average per win. But I also had 14 losses, which totaled negative $12,424, including commissions, for an $887 average. So my wins are technically still greater than my losses, but I have a lot more losses. And that's a recurring theme you guys will hear me saying a lot because I do overtrade a little bit. And so what I did well is I journaled every single trade. And if I didn't journal, then I didn't trade. I marked up the charts in anticipation of moves, and I was following those markups. I didn't show you guys that on my trading view because I wanted to have clear price action, but you could see if I showed you guys the markups, you'll see I had a trade idea whether the market moved up or down. I showed up every single day. I cut my losses quickly on trades that weren't showing me favorability, and I course corrected intra week, right? Which is cool because on Thursdays, you could see I did that little bit of a course correction and it ended up working out for me. And so that's why I'm very confident going into this coming week that as long as I keep that course correction in mind, the lesson that I learned from this week going into next week, I should have a very good week. Now, also, I didn't get too flustered and blow my account really, because it's very easy to have those big losses on Monday and Wednesday and just to really just let your trade just say, oh, you know what, this is an off week, just and just really just go a full tilt and just lose everything. I did not do that, and that's a win, right? My previous $500,000 account is exactly the opposite, right? And so what I can improve, I could be more patient for entry. I can trade what I see, not what I think will happen. I can also not scale in too fast. And fourth, I can also secure profit. I have to learn the difference between securing profits versus letting winners run. I have to make that distinction. That's going to be a very difficult thing because a lot of traders, even the most successful traders in the world, in the Market Wizards book, they have a hard time discerning the difference between the two. And the best traders in the world have figured out that discernment of whether to take profits or to let those winners run. And so what I learned is that I'm still developing my confidence as a trader, and I need to focus on my bias and learn from my mistakes. So let's say my bias is wrong. I need to learn about that bias and understand why I was looking at the wrong side of the trade direction versus letting other people and those external influences from people I respect and look up to in the trading industry to affect my own bias, right? And so what I'm going to be doing, like I mentioned earlier in this video, is that I'm going to be compartmentalizing myself and really removing that outside influence so that way I only focus on what I see and not let other people, because at the end of the day, my goal is to have my own fund. And if I have my own fund, I don't want to be listening to other people. I want to be trading what I see, right? And so I need to create that foundation for myself now, develop that confidence in myself right now. Now, also, and I wrote a little note here. I know what I'm doing. I was right on Monday and on Wednesday. I just let those external influences affect my decision making process, and which is the reason why I posted some pretty significant L's. Now, um, I also, what I learned is that my most profitable trades happen after the 9 a.m. 4-hour candle close. So I'm going to play my strengths. 10 a.m., 9 o'clock in the morning is going to be like the earliest I place trades, unless I see a perfect opportunity forming at 8 a.m., which does happen sometimes. But more often than not, I'm going to be waiting until that 9 a.m. candle closes, especially on Mondays. Just show me where the direction is going and then trade what I see, not what I think is going to happen, right? And not try to enter in a little too early. Also, I'm going to be, what I also learned is that trading is more watching and being patient with sniping and entry, not just trading all the time, right? Because I could be right on the overall idea, but then I place too many trades in anticipation of the idea working out and not being super patient. And as a result, lose money on the day. And then I don't have much wiggle room to play with for when the trade idea actually develops into the good trade opportunity that I should be taking at that time. So just lots of opportunities for improvement. But that's what this week was really for me, is terms of what I got out of this week is, yeah, I posted, $5,000 loss. Really, it was $1,300, but I had a lot of commissions that stacked up because I placed so many trades, which is something that I got to do a better job at. But of course, I learned from this week. And as long as I go and apply that learning, those things that I learned this week into next week and the week after and the next few months and the weeks, the month, the years from what I learned this week, I have no doubt in my mind that I will be successful in this market. So it's developing a little bit of confidence and also establishing momentum for myself. And momentum is the most powerful force in the world, in the business world. And so I'm going to title this video The Turning Point, because I believe that the turning point that happened for me this week was learning from my mistakes and learning about what not to do and learning what to do as well. And I applied those learning lessons on Thursday, and it worked out well for me. Friday, I didn't trade because I just didn't really see much movement. Or much very good price action for something that I would like to trade. So I sidelined myself on Friday. I was there, present, watching the markets, finger on the trigger whether I wanted to place a buy or a sell. Just didn't really feel comfortable with executing my capital. And also, of course, I didn't journal on Thursday as well. And so as a result, I just stayed sidelined, and I don't regret it. So, we're going to establish some momentum moving forward. I'm very excited for this coming week and the week after, and the few months to come. We are going to the holiday season, so I have to be particular about that. I'm very excited. You guys are going to see me recording some videos from different places because I'm going to be traveling a little bit for the remainder of the year, and for my business, and also for my birthday, and some other just work, business, and also a little bit of fun as well. And so I'm very excited, you guys. This is just this is the journey, right? The journey is not a straight line going up. It does have its ups and downs as you go up the hill, but I think we're kind of going on the right path. So I'm very excited. Hope you guys are taking some things away from this video, or just this journey altogether. And as I always like to finish off before on videos, is that these dreams that you have within your mind are placed within you for a reason. And that there's some higher power that wants you to go out and become the best version of yourself, as long as you go out and actually try hard and do your best. And so if you truly give something your all, I have zero doubt in my mind that you can achieve anything you believe yourself capable of doing. And if anything, the crazy thing is, we're usually capable of achieving a lot more than we think we are, right? And so that's what I hold true about myself, and I hold true for you as well. So I appreciate you guys for tuning into this 23rd video of this $1 million series. My name is Adam Reiser. Very excited, and I'm very grateful for you guys for tuning in, and I will see you guys in the next video. Thanks so much. Take care. Bye-bye.